Tax Day. Tax preparation is your roadmap to the pot of gold. I guess we could talk about that at some point. That would be an interesting program title, wouldn't it? Speaking of programs, of course, if you need to find me, this is me. You can scan the QR code, and that'll populate my details into your phone. I want to remind you that every Thursday night, poor John is here late after the last client leaves or the last call is done. I'm working on the program for you to keep it timely and great, although I do it by myself. I don't know who all those imposters are. And then Friday morning, I spell check it and I say, what the heck was I thinking? And we try to do a little bit better for you. Why are we able to do this program for free? And keep in mind, we run a for-profit continuing education provider. $52 a month gets you unlimited education, 20 to 24 hours of behind the firewall education. Yes, we do some free things, but like this program, the $52 also allows us to bring you the Frank Agostino programs, the IRS programs we partner with, plus all of that curated content from our paid speakers. So thank you again. If you'd like to join us for the International Tax Conference, I think I finally, there's one speaker and I in Canada have been going back and forth, but once we finalize it, I will have everybody ready. And next week, I should be able to publish the entire schedule for the program, and I'll turn on registration. So be super great to have you join us in New York City. A number of folks have already emailed and said, where's the link? They don't even know who's speaking. Where's the link? I've come before, and I want to come again. Thank you so much for those positive words. So what's going on in the world? Let's start with the tax update. I got to tell you, these numbers were updated early again this week, which on the one hand is great. On the other hand, not so great. We have numbers through today. What's been going on? Well, Form 14038 individual and 14038B business identity theft affidavit. 3 weeks, no change. Individuals, July of 24, businesses, December of 24. They should be so embarrassed that it takes this long to get things through the identity theft process. I'm hoping that this is one of the things NAEA chooses to talk about when we do the fly-in. If you're an enrolled agent and an NAEA member, look into the fly-in. I haven't been a member in 6 or 7 years. I'm a member again. I'm going to the fly-in this year. So I think that this could be very interesting to be talking to our elected representatives about. Individual returns. So electronic returns are, so electronic filing returns are 21 days processing, assuming they don't need human intervention. Paper returns are taking longer, especially if there's human intervention. So original returns, currently those submitted in February of 2026 are being processed. Amended returns submitted through December of 2025 are being processed. But very important caveat, this doesn't include returns that require error correction, math notices, or special handling. Those returns are taking longer, in some cases a year, 18 months. This 2024 returns from last summer, I understand, that were mailed in aren't processed. Returns with refunds are prioritized over those that don't expect a refund. Business returns, again, electronic returns within 21 days. Paper returns from February of 2026 are being processed, but the last 6 weeks, it said January. Now remember, business returns opened in mid-January, well ahead of individual returns. 1041s, original returns submitted in January are being processed. Amended returns are back to last May. That hasn't moved in 7 weeks, either one of those numbers. They've kind of been slow to process those things. We've discontinued 941 updates because it just doesn't seem to be any value to it. If somebody needs to know the current status, they can go to the IRS webpage or email me. I will happily tell you where it is. It's easy to find. Forms 2848 are currently 5 days for processing. That's a day longer than last week and 3 days longer than earlier in the month or late in the month of February. Now, I have a number of 2848 submitted over last weekend electronically that have digital signature, and we uploaded them. They hadn't posted as of this morning. So that 5 days is pretty solid. Why do I think that's going to move to 6 days? Because they should have been processed. Nothing has changed on the specialized forms. I kind of expect that this time of year. The ITINs, they're stapled to tax returns. It's pretty good if they're at February. 8802s are stuck in December. It's been 2 months, almost 3 months that's been stuck there. But that's normal because all sorts of people that are getting paid by foreign entities submit in December and January because they need those submissions for the current year, right? Those certificates. So that's expected. EIN processing dropped a day. It's a day faster for fax submissions. Their backlog is at 5 days. Paper submissions are within 30 days. My experience has been paper submissions that we submit, we wait 1 week to the day, we call in, and they can find the number for us. So that's cool. I don't necessarily care about the EIN letter. Sometimes I do, but we typically call in. We've had no movement in 2 weeks, though, on general correspondence. General correspondence is also abysmal. I just imagine stacks of paper that no one gets to. They're currently processing mail of individual correspondence from last November, business correspondence from last June, and other correspondence from last August. Other is injured spouse, exempt organization inquiries, and certain things related to Form 5500. Oops. So we've always said this e-file is just faster. Anything you submit on paper, certified mail, electronic return receipt requested, not priority mail. Hat tip to Donna Byrne, who reminded us that the reason you want to do certified mail with a return receipt is the code says that the onus is on the IRS. If we can prove it got there via certified mail, that's on the list of accepted ways to deliver to the IRS, and the onus would be on them to prove they didn't get something. So we want to do that. Priority mail, despite the ease, etc., it is not on the list. It has not been granted that same status in the Internal Revenue Code. So by all means. All right. So refund delays are getting scrutiny. So you'll recall Executive Order 14247, something that's not that popular with many clients, typically older ones, but it's not always just the older ones, that we're not going to issue a check, buddy. Give up your bank details. Conversely, eventually we're not going to take payments either, but so far they are. So we know that without much to do, we know that the issue is that the IRS is going to accept the return without a bank information on it. We weren't sure originally, were they going to reject the e-filing? They're going to accept the return. They then send you, after processing, they send you a letter that says, hey, we need your bank details. Here's the QR code, scan it in, create your account, give us the information. We'll give you 30 days to do that. If you don't get that done within 30 days, at the end of the 30 days, you get another letter. Hey, we'll get around to mailing you your check in 6 weeks. So that's 4 weeks that they sent you the request for bank details, 6 weeks after that. Total of a 10-week delay for paper refunds. So these guys in Congress, apparently someone at staffer in their office attempted to go and call the IRS and say, how do I override this? How do we get my constituents' check? And the IRS said, there's no provision for that. So the inquiry was, how many of these notices have you sent out? As of last week, the date on this letter, which should have been uploaded to the handout section. And if you're watching on YouTube, there should be a link down in the comments section. Subscribe to the YouTube channel and you should have access to that. So 530,000 notices were sent as of last week, with 300,000 more going out this week. 830,000 people so far are affected by this. How ouch, right? And probably every one of them has called your office to be unhappy. At least it sure feels like it. So we said, I took you through this process, 10 weeks, 2.5 month delay. Why the delay? Because they want you to do direct deposit. And we knew about this kind of towards the beginning of the season, right? So you should have been able to tell your clients. I've been notifying clients since last September that this was happening. So who does Congress feel, or these particular congressmen feel, is affected? The unbanked taxpayer, no doubt. However, even if they get a check, they're cashing it somewhere. So folks with disabilities, they may have barriers to navigating the IRS online system if your site is limited, or even getting out if you're disabled, getting to the bank. Limited internet access, unable to set up or manage the IRS online account. I don't know about you. I agree. I wouldn't want to be using a library computer or another public access computer to set up that account. Agreed. They don't otherwise have IRS online access. They can't self-serve. They can't expedite or redirect the refund. Okay. Taxpayer Advocate reported that 10 million people last year, 10 million, received their refund in a paper check. Wow. All right. So there are a lot of folks that they would like to move. Now, who are the guys behind the inquiry? Danny Davis, a Democrat in Illinois, and Terry Sewell, a Democrat in Alabama. They are both on the House Ways and Means Committee. They're the ranking members. So they're leading the charge. They wrote this letter to the IRS, to Mr. Bisignano, the IRS CEO. We don't have a commissioner, right? The CEO. So their argument was, Congress did not authorize you to do this, did not authorize the delay. The executive order says, I want, wherever possible, no paper checks. But on their own, the IRS administratively created this, we would like your information, and the additional 6-week delay. So they're saying, we didn't tell you you could do that. IRC doesn't require electronic only refund payments. Yeah, but an executive order kind of has the weight, not quite, but kind of has the weight of law, right? So their argument, the delay results from a presidential executive order, not a statutory requirement written into the code passed by Congress or authority to write this by Congress. Congress, not the White House, has the authority over tax administration. Okay? 10 million taxpayers, particularly hit, those that are low income, those that are in rural areas, may be seeing a significant refund delay, no ability to override this. So the letter you see asks these questions, right? They sent it to Acting Treasury Secretary Scott Bessent to respond by March 23rd. Actually, it may have gone to Mr. Bisignano. I'd have to look. But the letter demands specific, quantified answers. How many taxpayers without an IRS account have had a paper refund? How can they request a paper refund check immediately? How can they override this delay? Great. Another form to submit with the tax return, yet more phone calls to the IRS's overloaded service center. All great, right? How many returns were already filed without bank account information? Well, we kind of know that, at least 830,000. How many CP53E notices? That's the notice asking for additional information. How many of those have gone out? How many remain scheduled, right? They can't immediately issue it, right? So how many exceptions have been granted to the executive order, and on what grounds? Well, if you mean just the IRS, none. If you mean the other agencies, nobody seems to have put in place a system to do that. They want to know, of those 830,000, how many paper checks have already been mailed so far? And the answer is not many, because even if you e-filed on the opening date in late January, February, March, it's going to be mid-April before those first returns get processed. And I would argue it's going to be even later for folks that were subject to the PATH Act delay, that the return, that they aren't getting that first letter until the middle of February. It's getting released. middle of March, middle of April. I mean, that's almost May for some of those folks that are not banked. So, wow. So what should you take away from this? We already knew that there were client questions coming over the delay, even if you warned them. They're going to get that 53E letter. So I have a number of people who confirmed to me in writing, yep, I understand the 10-week delay for my check. I'll wait. Well, now that we know that 53E letter is coming, I told them, by the way, you're going to get a letter. You don't have to answer it. The 30 answering it, not answering it, that 30-day clock has to run. So we told them this now. And anybody that subsequently tells me they want a check refund, we're going to tell them that. Simply to not have calls coming in here and not have them worrying a little bit more. So in the larger context, this is interesting that, granted, it's the Democrats, and this could be a pushback type thing, but there is somebody advocating in Congress for those folks that are affected by this. And even though there's a push here for electronic tax administration, digital delivery offers gains, but what does this do to the taxpayer? And Frank Agostino was where this comes from. He has said congressmen only care when people are calling, the constituents are reaching out, calling their office, and when people don't get their money and can't get through to the IRS, they're calling the congressman's office. That's what these guys are going to care about. So this drive is unlikely to reverse, but are we doing some things too quickly, too soon? Don't know. But so in addition to being prepared, I think we're always going to have people that either can't or won't give up their information. So those that are digitally disconnected, what can we do? How can we help them? Personally, I would think, how are these folks accessing services these days? And if they're walking into some of the low-income taxpayer clinics, or if they're walking into Vita sites, should we be able to help them there with setting up an account and doing these digital things? Should we make sure every credit union, every bank is offering free accounts so people can get direct deposit? The answer is probably yes. All right. So these are broader, accelerated push towards electronic tax administration, right? The hammer went down and said that you have to do this. And you have to do it now. We didn't give people a 2 or 3 year warning. There's no phase in. You have to do it now. So this isn't isolated, and it's an indicator of what the future is going to be. People don't have access to refund anticipation loans, really. So they're not seeing their money because it's not in the accounts. So, all right, let's look now about at some of the things happening this week under federal policy. So Cory Booker, who is a New Jersey senator, has proposed a $75,000 standard deduction. I didn't put the proposed law star on here, I'm sorry. But this is a maybe, right? It's a proposed law. He would like to have it go to $75,000, and it's called the Keep Your Pay Act. Who is he? What constituency is he trying to appeal to here? But they're looking. It's going to be a proportionate amount for standard filers, net household filers. So it's probably 25, 37,500, and 75,000. And you would have thought that this is a Bernie Sanders proposal, right? I know I'm always picking on poor Bernie, but it's going to double the current standard deduction, more than double it. And they're looking to reduce federal income tax burden on working and middle-class folks, shift the burden, though, to corporations. Because remember, if they pass a law saying we're going to give you a tax cut, they, meaning Congress, has to pay for it, right? Bird rule. How are they paying for it? Corporations and higher income taxpayers. And Sanders is going to come into this as well towards the end of the program. So this is a significant proposed expansion of the standard deduction. What else does Mr. Booker want to do, the Honorable Cory Booker? Well, he's got a pretty good plan in terms of how to do this. A $43,200 child tax credit, not $2,200, $4,320 for kids under 6, $3,600 for those age 6 to 17. In the year of birth, a $2,400 cash bonus. We had that 25 years ago. I still own block offices the years that we had that. These things would be fully refundable. The idea is to offset the expenses in the lower income households. This has been, remember, during COVID, the Democrats had expanded that additional child tax credit, advanced child tax credit, and they wanted that made permanent because that increases household income. And studies show that money isn't saved, it isn't used for something later. It's spent today on lifting the household's income out of poverty. It's spent on day-to-day things, and that's probably a good thing. The earned income tax credit, we would expand eligibility for those who are working in ages 19 to 24. We would expand eligibility for those over age 65 that are still working. They want to triple the single person earned income tax credit, those that don't have children, right? They want to, again, put more cash in their pockets. So he's building on the temporary child tax credit expansion that we had under the American Rescue Plan Act that was not made permanent, right? But it was during the COVID era. But he's looking to bring that back. And that's been part of the Democratic platform, is to see this made permanent. So how is he going to pay for it? Well, his proposal has a number of revenue raisers. Increase the corporate tax rate. Well, even though we have that flat rate of 21%, for smaller taxpayers, that wasn't increased because many of my taxpayers paid 15%, and that was it when we had a graduated tax rate. But many corporations were at that 35% rate, right? Got there pretty quickly. So they want to increase the 21% rate, that break they were given. They want to increase the tax on stock buyback. So if a corporation is buying its own shares back, there's already a tax. He wants to increase that. He wants to tighten the executive compensation deduction limits. Well, it's already capped at $1 million, I think. So unless he's going to charge an excise tax above that, that's already pretty tight. And then there's perceived tax loopholes. There's a number of things he would like to eliminate. So the framing here is the proponents are saying this restores fairness across income levels. I don't know. Critics are saying it could reduce U.S. competitiveness globally by increasing that 15% tax bracket. So for us, massive shift towards standard deduction usage. I don't know who's going to itemize after this. It'll reduce the planning value of itemized deductions, including SALT, charity, mortgage interest. I mean, other than folks that are going to put huge amounts into donor-advised funds and leave them there, right? Once every 5 or 10 years, I'm going to itemize because I put money into a DAF. High net worth tax planning strategies will need to be reworked and looked at. So this will reshape the individual tax base structure, and we're going to have to watch this carefully. I don't know who. I haven't seen a Republican pick it up. I don't know if there's a companion bill in the House. I couldn't find one, but this is very new, so maybe there will be a companion bill. The Republicans, though, on the other side, and I talked about this for like a year, right, after the advanced child tax credit expired and the immediate expensing of research and development ended, right? They each wanted one of those things, and I thought there was going to be a compromise. There wasn't. The Republicans want inflation adjustment for capital gains. So 8 House Republicans, so Booker is a Senate Democrat, 8 House Republicans have asked Treasury to allow for inflation adjustments on cost basis for capital assets. So this would reduce the taxable gain on long-held investments. Well, I thought that's why we give you a preferential rate if you hold it over a year, is because it's not indexed. The goal, what's the real goal here of the administration? To encourage homeowners to sell their homes and reduce the tax drag, though, on these long-held appreciated property. But we already have that with that $500,000, $250,000 Section 121 exclusion. Proponents are arguing that inflation adjustments prevent taxation of an illusionary non-economic gain. I don't know. Now, can Treasury do this unilaterally? The central question is whether Treasury and the IRS possess the administrative authority to index, to do a cost index for inflation. And supporters argue the IRS has the authority to do this. Ron Wyden, Democrat of Oregon, Senator, and Ron Johnson, Republican of Wisconsin, are both arguing that the change would require congressional legislation, not executive action. So we're going to see what happens here. Another issue we're seeing is the acting commissioner issue. Treasury Secretary Scott Bessent is serving as acting IRS commissioner, even though we have Mr. Bisignano as the CEO running the day-to-day. So Mr. Bessent has been acting commissioner, and there's a statutory deadline here. So the Federal Vaccine Reform Act of 1998 had this little thing tacked onto it that said you can only serve as an acting advisor for 210 days without getting Senate confirmation. So this has been running since August 9th of last year, when he was the 6th IRS commissioner, technically, right? We had 6 commissioners, and then we had 5, and then made Mr. Bessent the 6th, I think. So the deadline, though, was March 7th. So there's a legal risk here. Continuing beyond that date could expose the agency to administrative law challenges. They can't do that. Now, there are some workarounds that have been talked about. First, can they redesignate him as a senior official performing duties? A technical workaround that's been done in the past when they've gone over the 210-day deadline. Can they have an interim appointment of a different acting official to temporarily either reset or bridge the statutory clock? And then in 30 days, bring Bessent back? Certain statutory duties of the commissioner, though, cannot be delegated. They can only be done by the commissioner. So any of these workarounds would have certain boundaries that would need to be addressed. A legal challenge would be required to enforce the 210-day limit. So someone's got to sue. So it's probably a litigation risk more than in a bar of service. In other words, the 211th day, nobody's going to rush him out of the building or take away his keys to certain IRS tools. Now, this is a problem. In the movie Casino, though, comedian Alan King, I forgot the name of his character, he's advising Robert De Niro. All you got to do is keep changing your job title, like from IRS executive to Treasury Food and Beverage chairman. He had that heavy New York accent as he gave him this advice, right? Because he was worried De Niro's character had 10 felony convictions, right? So he's worried he's not going to get approved by the casino board. Anyway, so that advice didn't work in Nevada. I don't think it'll work in Washington either, right? You can't just keep changing your title. All right. So quickly, there's going to be no Green Book this season. Assistant Secretary for Treasury Policy Ken Kise, someone I had not heard from before, indicated the administration will not issue a Green Book, a departure from their past practice. So why? We're too busy doing the 2025 work. The Green Book normally would give us the detailed explanation of the administration's revenue proposals and technical legislative explanations that they used in anticipating direction, right? So in the drafting of the direction, in other words, they said, well, if we do this, what's it going to cost? Well, if we do that, how are we going to pay for it? It's something to look back at. What's legislative intent? It comes partially from the Green Book. So this creates certain uncertainty for us and certain uncertainty for different explanations. All right. So why this matters? We talked about the uncertainty about the standard deduction expansion, the uncertainty about capital gains indexing, and uncertainty about IRS leadership, right? No Green Book. This is why these things matter. So how soon the IRS CEO, Frank Bisignano, who also runs the Social Security Administration, testified before the House Ways and Means Committee, which is common. He probably does this monthly. So he announced that the IRS was going to change how the refundable adoption tax credit amounts would be handled. They said that if you have a carryover from 2024 that isn't fully used in 2025, we're going to refund up to $5,000 of that as a cash refund as well. So if you had normally, this year, starting in 2025, you would get a $5,000 per qualifying child cash refund. You'd use up your tax, the non-refundable portion, and then we'd give you up to $5,000 cash as well. So these previously stranded credits, though, now they're saying 2024, if you have stuff carrying over, we're going to refund that as well. So the IRS confirmed that unused credits are can now be, we knew that we could apply it to 2025, but now they're saying we're also going to give you $5,000 of that as a cash refund. That's important because folks that adopted children and spent this amount of money are maybe cash strapped. So now we're going to put more cash in their pocket. So previously we knew that we were going to give current year expenses, we're going to get a $5,000 cash refund after applying any expenses to reduce the current year tax. Now we're saying if they had 2024 stuff carried over to 2025, we're going to give you up to $5,000 of that back as a cash refund as well. Before this change, the unused adoption credit just carried forward indefinitely. Use up the tax for the current year, carry the balance over. We said this, I just said this already. So those that had significant costs that they're waiting to get some sort of reimbursement, we're going to give that to them now. So how are we going to do this? Because we've been filing returns. Form 88, is it 8839? Doesn't address this. And we've already filed returns that carried over the credit. So Bisignano confirmed the carryover refund policy. He said this is going to happen. The agency is going to work to roll out a policy as quickly as possible to get that money into people's hands. They're going to minimize the disruption of the current filing season. What that could mean is I bet it's going to mean they're going to use math authority for the returns in process to give them more money. Taxpayers that are applying for 2025 returns, they're going to just continue to file and apply the credit to this year. During the filing season, we may see that money come as they figure it out. It may come in the current return. It may be an adjustment afterwards. Let's see how quickly this rolls out. We have no idea. I would start notifying my clients, hey, this is a policy change. When you do this year's return, if you identify folks that they have no tax liability and they have other credit carrying forward to 2026, I would probably tell them, you know what, you're likely going to see this as a refund of up to $5,000 additional. I don't know when, I don't know how. I know it's going to come. 100,000 families have adoptions every year. It's a rough amount, and they adopt as many as 150,000 children. So potentially this can affect a lot of folks. We're in a good position to identify qualifying clients proactively and tell them this is going to happen. Trust me, that's not the notice. No one's going to call you up and say, hey, I got an extra $5,000. Can I keep it? Probably they're going to just direct deposit the money into accounts as well. So they're going to enable these refunds of unused adoption tax credits carrying over from prior years. So we're going to identify people. We're going to let them know. We're going to monitor guidance. I'll let you know here as this evolves, what we hear, what we see. If we start seeing notices or we start seeing money, or I hear from folks like you, hey, I got money. Hey, I guessed that form number correctly too. I wonder if there's going to be an updated 8839 and updated tax software. I don't know. That's one of those things Drake used to tell you in July. Hey, you have a tax update that you weren't expecting. I won't spend too much time on this, but this is a data allegation that of an SSA data breach. So this is sort of secondhand. There was an article this week in Wired magazine where they reported that there was a whistleblower complaint filed that a former Social Security Administration engineer might have copied a bunch of IRS data onto portable drives. So not good, right? But I couldn't find this anyplace else other than in Wired magazine. All right, so the systems referenced in the complaint say that some core Social Security identity databases that are used in federal ID verification infrastructure this guy might have copied it, might have been compromised. Now, allegedly, he was going to anonymize the data. So it's only an allegation reported in the press. No breach was confirmed yet. I guess you get one of those letters, and then we'll see that legal advertising. Do you have a Social Security number? You might be due compensation. So what databases are involved? So two specific data sets. the Numident database. This is the master database of numbers and your associated identifying information. Hundreds of millions of people, both living and deceased, are in here. This is the second largest database in the world after the Mormon database, right? That has over 1 billion records in it. This is the second biggest database. The death master file, used across different government systems to lock out things, right? It identifies folks that have died. You start to see that in your tax returns. You start to see things that you can't access records online because they hit the death index. This flags and prevents fraudulent refund claims, as we know. So why is this important? Both of these data sets are involved in IRS identity authentication and refund fraud prevention. I'm just worried about my clients having issues, or worse, that somebody gets a hold of this and compromises my credit. So 3 parties issued responses as reported by Wired magazine, and none of these are a confirmation of a breach. The accused individual denies the allegations through an attorney. Leidos is the government contractor. They reported finding no evidence that data exists on their networks following an internal review. The Social Security Administration said the claims are unsubstantiated, and they have not confirmed any unauthorized data transfer occurred. But somebody had enough information that they submitted a whistleblower complaint. So why do we care? What's this going to do to identity verification? It's a cornerstone of how they verify identity. What's this going to do to is this going to slow down the IRS master file processing of refunds? What's this going to do to the federal identity infrastructure? This data feeds into a whole bunch of different identity verification systems beyond just the IRS. So it's only allegations, but we're gonna watch this. So Bernie Sanders has proposed a 5% wealth tax. I'm only putting this in here so that you can be aware of it in case any of your billionaire clients ask you. But it's going to target those with a net wealth above $1 billion. How are we going to target them? How are we going to determine their net worth? How are we going to know whether they are or aren't complying? I don't know. He wants to assess 5% annually on their net worth. And then he's going to use this to expand Bernie. He's going to use it to give it away. He's going to expand social programs. So they're saying tax what you own: stocks, bonds, funds, private business interests. How are you going to value some of that? Real estate. How are we going to value that? Non-financial assets like art, coin, intellectual property. What are you going to do? Self-assess every year? So implementing this would require an entire tracking system, evaluation system, and an audit system. If I have to self-report, you're going to need to, what are you going to do? Rely on Forbes? Forbes says I'm worth this much. Sam Zell famously said to a Forbes reporter, he used an expletive, but he said, what do you think? We track this every day? No idea what I'm worth, you know? In the history of the Forbes 400 listing, right? The wealthiest Americans. Donald Trump is the only person to ever say my value was too low. Other people have consistently said it's too high. I wish you don't use this list because I don't want people bothering me. So supporters of the proposal estimate $4.4 trillion could be collected over 10 years. Ironically, President Trump's tax cuts in the OBA cost $4 trillion over 10 years. And then they're assuming there could be as much as a 10% avoidance, you think? Revenue could be lower. People could go out and restructure their assets. People could shift wealth into trusts, foundations, offshore vehicles, where opaque things where you can't see what's there. And then, of course, will this alter investment patterns and capital allocation decisions of folks? Well, I don't know. I mean, higher value is higher value. So the estimates, there's a wide range here. Now, I read most of this on Tax Foundation's website. They're a nonprofit. So the supporter estimates are $4.4 trillion. I outlined that. Tax Foundation thinks it's someplace under $3.5 trillion and could be as low as between $2 and $2.5 trillion to collect this over a 10-year period. So beyond revenue question, economists are saying, how would this wealth tax reshape incentives for saving, investment, and capital? I don't know. If I normally have a 5% return on my portfolio, you're effectively going to consume all of my investment returns. And that's without even income tax being applied. I don't know how this works. So we'll see how this goes. Of course, there's the interesting argument. Can they do this? It's a constitutional question. Constitution says that these types of taxes have to be applied to everybody universally. And maybe they can't do this. Maybe this is not something that the administration can do. Does it need to be passed as a tax? And will it survive a constitutional challenge? You know, about 5 seconds after this passes, all sorts of folks are going to file. This is me thinking of you, without my team, of course. I'd like to remind you that we have 13th Annual International Tax Conference. Next week, I'll have the agenda and the registration open. Finally, I want to close and remind you that hard work will pay off. It really will. All right. Thanks again for joining us, and have a fabulous weekend. You're probably working like I am. Don't work too hard. Make sure you take a break. Your health is way more important.